navigating unpredictable supply chain disruptions. Chris Demetrulis is managing director of the transportation practice at Gallagher. Hi, Chris.
Good morning.
Thanks so much for being with me today. I really appreciate it. Chris, what is going on out there right now that makes supply chain management especially unpredictable?
I'll tell you, there's quite a bit if you watch the news, as well as a lot of different publications. I mean, with the change in administrations and just the global supply chain is kind of in a wait and see mode right now. I think we've got a lot of different countries trying to figure out exactly how they're going to trade with each other. You've got wars in certain parts of the world, and I just think that is a very interesting time right now in the supply chain to try to navigate it. And whether you're domestic here, or if you're reverse flow business in different parts of the world, it's definitely challenging, and it's a hot topic of conversation with not just our clients, but the people within Gallagher and just our peers, the people that we talk with all the time. So it's definitely definitely an interesting time.
Tough times. Is there actually more cargo theft occurring right now? And if so, why do you think that would be?
Yeah, I tell you, not only is it's on the increase, but I think what's even more interesting about the cargo theft is that they're becoming more and more sophisticated. So it used to be where you would have certain situations where you have possibly an inside job or somebody that knew about a specific container or trailer, but now, I mean, the GPS tracking and the understanding of where and when and how to strike most efficiently from those folks is really becoming more and more prevalent. So it's definitely tough to keep ahead of it, and I think you're seeing a lot of insurance carriers investing heavily in former either FBI or police folks that are on staff to try to help mitigate that risk.
Mm-hmm. That's the physical side of the problem. And then there's cyber attacks on the other side, the virtual side, the information systems side as well.
Yeah, I think those go hand in hand. I think that the bad actors are trying to figure out the best way to stay ahead of it. And with the cyber piece, I tell you what, about 5 years ago, transportation, even though it was kind of under the radar for most, transportation was still a top three targeted industry for cyber attack because, quite frankly, the systems weren't invested in. But I think that that's changed a little bit here. But as far as the actors, they're doing a very good job. I mean, there's kind of a dovetail between imposter carriers or brokers and physical theft, but definitely it's going hand in hand with how that theft is moving through that supply chain.
Yeah. So is all this manifesting itself as an increase in business interruption claims? Are you seeing more of that?
It's interesting. I get that question a lot, and the insurance policy forms right now. I would say that it's delay is typically not a covered risk. However, there are some insurance carriers that when they understand and they know that a client, an insured, understands how to use a typical coverage, they actually may offer them to have some kind of an endorsement, whether it be a supply chain management direct damage endorsement that be added to a policy. I think we're seeing insurance carriers, if they know that you're a best in class carrier, you've got the checks and balances, they're offering some of that. So the business interruption side of it definitely happens, whether it's an insured risk it's a lot different. So I would just say that most of the insureds we have out there that are sophisticated, have technology, have systems, and have a really good process, they can actually be afforded coverage for some of these delay considerations.
Oh, really? I mean, even so, I
Yeah.
mean, I think obviously one of the most obvious, the strangest ones in the last few years is the blockage of the Suez Canal by a single container ship. That led to a number of claims, but I don't believe a lot of those claims were honored. Is that right? That wasn't in the.
Well, yeah, and I think that goes exactly to my point. I mean,
Yeah.
delay is part of that. I mean, it's very difficult for an insurance carrier to go on the hook for something like that, where there's an accident that delays everybody else. Now, if you have an accident where something is, you have a fire, or you have something that's upset turnover, there's different situations with regard to that where insurance could kick in. But when you have just a flat out delay, even on carriage over land. I mean, delay typically isn't covered. So it's one of those things where it's crucially important for our insureds and for anybody out there that might be listening to this, that, enterprise risk management is important. Implementing that within your organization to understand where your suppliers are, how you're going to avoid that. Do you have
Yeah.
multiple opportunities and outlets? I think it's a critical process for people to go through.
Liability, of course, has always been at the core of insurance claims and decisions as to whether insurance companies are going to pay off on a claim. Is that any more complex now? Potential liability issues arising from all these different disruptions we're talking about, or is it just pretty much the same as it's always been?
No, I think it has changed, and I think evidence of that is the way that insurers are now underwriting risk, what they're willing to go on the hook for, limits, capacity, things of that nature. I'll give you an example. You've got some very large, whether the manufacturers of whatever kind of goods they are, that typically used to insure their own goods just to make sure they had insurance on them, and now you're finding that even their insurance programs, because they're having these losses in larger numbers, that the insurance carriers are start ratcheting down the amount of capacity they go out. So I think that the
Mm.
change in the marketplace, although it's still evolving, we've seen a big shift. It used to be, I would say 10 to 15 years ago, you could find a single insurer that might take on a $50 million limit because they feel like someone's a good risk. And now we're seeing those limits, especially, let's just talk about, I know you said liability, but cargo, I would consider part of that. You're seeing a lot of those markets not only reducing their limits to say 5 million, and that's on a good day, but we're seeing consortium type situations where you might have a lead carrier be in the lead position, but then have 4 or 5 other insurance carriers follow them on that form and build up limits that way
I
in a
see.
pro rata format. So that way everybody kind of takes a piece of that loss. But gone are the days of high limits without qualification. And I'm sure we can get into some of the qualification considerations
Well,
here.
I'm sure, of course, this all must be accompanied by higher premiums as well. Is that not right?
Yeah, I think so, and I think what the insurers are doing a pretty decent job of, though, is really we've talked a lot about this before, and I think that I'm going to dovetail it with, you mentioned cyber before. Before, you could get a cyber insurance quote for almost nothing for high limits, and then when cyber started becoming a real consideration, those underwriters, you couldn't just go out and get a quote. You actually had to qualify for insurance. What are you doing? What are your best practices? Are you
Yeah.
going to avoid the things that are critical that are going to cause you an insurance buying problem for years? So I think that the rest of the market has kind of done the same thing. And cargo is one of those things where the insurers are looking to say, when I'm going to deploy my capacity, am I going to be with people that I feel that are going to take care of it? And listen, it's not just the insurer, ultimately, if you have claims paid out, you're going to have to pay for them somehow, right? So
Yeah.
I think that the qualification piece of that and how the insurance carriers are underwriting has definitely changed over the last 5 to 10 years.
But I would imagine that even going back years and years, if you were ensuring the security of a physical facility, you would have to show that you were at least taking steps to protect that facility with security systems and alarms. If you had nothing like that, I'm sure an insurance company would come along and say, "Hey guys, you didn't put in due diligence in even protecting your stuff, so why should we pay off?" Right? Wasn't that always
Yeah.
the case?
Well, I think you're right. I think that we have become more sophisticated, and the technology's helped in that. But
Yeah.
you know, 5 to 7 years ago, we used to have situations where property coverage, you could have a trigger of an alarm or a water situation that would ruin a lot of product. Well, it became very evident that even hackers could get in and turn off or turn on a sprinkler system to damage goods.
Oh,
And
wow.
property carriers started saying, listen, we're going to kind of take that technology piece out and push that over to the cyber folks. So yeah,
Mm.
I think you're seeing a change across the board. And again, best practices are going to be the insurers are going to reserve their, what I would call their premium rates and policy forms for those that are doing very good protection and
Yeah.
mitigation in their facilities.
Are there cases where insurers are withdrawing from markets altogether right now, where you can't even get insurance because the risk is so high?
Yes, I think that some of that, listen, we could talk about regulation in certain states and things that are going on. And I think that that's something that'll eventually get worked out. But the way that I typically see these things happening right now is the insurers are really, again, going back to that qualification. They're going to look to see who those insureds are, or those prospects that they're underwriting. Are they really doing that due diligence? Are they making sure that they're protecting both themselves and the insurance carrier's capacity? Because ultimately, that's where the marrying up of that comes. And I think that you can move that into when you're marketing that insurance, the direct markets, the ones that are going to look at highly protected facilities and or really good processes around protection for theft, are going to have those direct relationships. And I think that sometimes that wholesale marketplace is reserved for some of the ones that aren't necessarily doing the things that they need to, or on the way to it. I'm not saying that they're
Right.
not trying to do, but are still in the process of developing those best practices.
You mentioned technology. What specific kinds of technology tools can help?
Well, I think there are a lot of different things. I mean, there's technology. I mean, the cameras are have always been out there. But when I think about technology, I think a little bit more about, we talk about GPS and how that works. What's interesting to me is emerging technology and tools, predictive analytics, anticipating how to address issues as they come up. I think that GPS is still very, very relevant, especially when you have, let's say you have a shipper and you have a transportation logistics company. The ability to communicate with your client where your assets are, what, are they going to be on time? Can you adjust for that? Can you let them know, communicate with them? Because I think the most important thing about the technology is removing the unknown. And when you have people that are communicating and saying, listen, we're our on time arrival is supposed to be noon, but guess what? We're in traffic. We're going to be there at 3. Just kind of make adjustments to do that. So I think that's really one thing
Mhm.
that has helped that, and I think predictive analytics have helped that as well. Whether it's drivers, understanding what your driver force is going into, and I think that that's a longer conversation, but understanding just the mental, how your drivers are reacting on a day-to-day basis to what their risks and what their struggles are is really something that's creating a lot less delay and making sure that people are able to deliver those products on time.
That's some good advice. Chris Demetrulis of Gallagher, thank you so much for joining me to talk about the state of the insurance market, risk management, and how unpredictable supply chain disruptions can be coped with. Thanks a lot for your time.
Thank you, Robert. Appreciate it.